Okay, let's get a check of the top business news stories. Our business editor, Kate Moody, is here. Hi, Kate.
Hi, Tom.
The French government is paring back some of that key COVID-19 support that it's been giving for businesses and workers.
Yeah, last year alone, the French government spent around 90 billion euros in emergency aid. About a third of that was for its furlough program. Now, as restrictions are eased, it's starting to turn off the tap. Businesses will still be able to apply for direct aid from the so-called Solidarity Fund, but it will cover a smaller percentage of their losses, just 20% by August. Large and medium-sized firms that are still struggling will have access to a new €3 billion fund, which can distribute loans or equity injections. At the same time, from today, the government's starting to wind down that furlough scheme, which paid the salaries of millions of private sector workers over the past year. Before today, the furlough scheme was covering about 84% of a worker's net salary. That will now go down to 72%. Employers, meanwhile, will have to pay an increasing percentage of those paychecks. There is an exception for some of the sectors that have been the worst hit during the pandemic, like tourism and hospitality. They'll have another month before that reduced rate is applied. Well, the changes come as economists are debating France's economic response to the crisis and whether the support put in place may have been too generous. Catherine Bennett has the story.
It's back to business as usual. This restaurant in Marseille was able to furlough all of its employees during the pandemic, thanks to financial support from the government.
If we had had to continue paying the salaries of everyone who works for us, we would have quickly gone under. It would have been a disaster.
Now questions are being raised about whether French state aid was too generous. One restaurant owner, who wanted to be anonymous, admitted that the state aid he's been receiving since November, €10,000 a month, has actually helped him turn a profit.
Sur les 10 000 euros, il restait quoi? Il restait un prêt que j'avais contracté pour ouvrir ce restaurant. Il restait le loyer et après des charges d'électricité, d'eau évidemment qui étaient très largement inférieures aux charges habituelles. Donc je savais très bien qu'il y aurait un surplus.
Economists are debating the merits of the French approach to supporting businesses during the pandemic, as the government begins to wind down its aid.
It's possible that the government has actually been too generous, particularly with the furlough scheme. We've ended up strangling the economy, holding back businesses, and we're going to feel the economic effects of that.
We've limited the damage, at least in terms of the unemployment rate. We've avoided the widespread closure of businesses and the destruction of human capital. Once you've destroyed the workforce, it's difficult to build it back up again.
The French government has estimated the cost of the crisis to be €424 billion over 3 years.
7 EU member states have today launched a digital COVID health certificate, essentially an app to standardize and collate test results or proof of vaccination. The information will be stored in a QR code that can be scanned and recognized by all of the EU's 27 member states, plus neighbors Iceland, Norway, and Liechtenstein. The idea is to allow travel and other activities to resume safely across the bloc. Bulgaria, the Czech Republic, Croatia, Denmark, Germany, Greece, and Poland have started using the system today. Others will follow by the 1st of July.
We're launching the technical infrastructure that allows for the safe and privacy-friendly validation of all certificates, the EU Gateway. This is a great success, well ahead of time, which gives us every reason to be confident that the system will be fully up and running by the 1st of July.
Let's check in on the day's trading action now. The major European indices closed higher, gains of between 2/3 and nearly 1%, boosted by data suggesting a strong rise in manufacturing and factory activity, both in the Eurozone and the UK. Wall Street is more muted as it returns after a long Labor Day weekend, although we are seeing stocks passing just above the flat line in the last hour or so of trade. Oil prices, meanwhile, have hit their highest levels in 2 years, even as OPEC and its oil-producing allies agreed to boost output in July. The U.S. Supreme Court has declined to hear an appeal from Johnson & Johnson, meaning that the pharmaceutical giant will have to pay more than $2 billion in damages in a case about the safety of its talcum powder. The firm had been seeking to overturn a 2018 verdict which found a risk that use of its baby powder could lead women to develop ovarian cancer. Johnson & Johnson continues to deny that its products contained asbestos or caused health problems, but its legal options have now run out. More than 20,000 lawsuits were filed in relation to J&J's talc products, which were removed from U.S. and Canadian markets last year. The World Trade Organization has this week relaunched negotiations on a temporary waiver of intellectual property rights or patents of COVID-19 vaccines. The Biden administration threw its support behind the proposal in a surprise about-face a month ago, but there's still debate on whether that's the best strategy to speed up vaccination across the globe. Luke Schrago explains.
The idea has been on the table for months. An intellectual property waiver on COVID-19 products, in particular vaccines, that could put a swifter end to the pandemic, with nations like India and South Africa leading the charge at the World Trade Organization.
Agreement will allow use of intellectual property, the sharing of technologies and technology transfer, so that we achieve the ambition of none of us are safe until all of us are safe.
In October, Pretoria and New Delhi put forward the idea, one that gained a sizable boost after Washington came out in favor last month. However, it's undergone revisions, and negotiators think it's unlikely to pass in its current form. Its scope is wider than before, and even if it were to pass, it would need another full consensus from all 164 WTO members to end, meaning any one country could keep it in effect indefinitely. What's more, there's ingrained opposition from Canada, Switzerland, Korea, the UK and the European Union, who say it's not a matter of sharing the technology, but the means to make it.
We need to collectively help emerging market economies more, boosting the production of vaccines. Intellectual property waivers may help the supply of vaccines, but not in the short term. And what we need is sufficient global production capacity now.
Even the World Health Organization seems to agree, with its director speaking of gaps in production and the need to get vaccines into circulation in less developed countries.